You know what nobody's talking about? While everyone's debating stocks versus crypto, there's a silent wealth transfer happening right now. And if you're not paying attention, you're on the wrong side of it. Let me show you something that should make your blood run cold. Central banks just bought over 1,000 tons of gold in a single year. Not stocks, not bonds, not Bitcoin. Gold. The same asset financial advisors have been telling you is a barbarous relic for decades. Why? What do they know that you don't? Here's the thing. We're living through the largest monetary experiment in human history. Since 1971, when Nixon severed the dollar's link to gold, we've been operating on pure faith. Faith that governments won't print too much. Faith that the dollar will hold its value. Faith that your savings won't evaporate overnight. That faith is cracking. Look at what's happening right now. The Federal Reserve's balance sheet exploded from under $1 trillion to over $8 trillion in just 15 years. That's not economic growth. That's currency debasement on a scale never seen before. Every dollar they print dilutes the ones in your pocket. It's the invisible tax nobody talks about at dinner parties. But here's where it gets interesting. While your purchasing power erodes, gold has been quietly climbing. Not because of hype or speculation, but because smart money understands something fundamental. You can't print gold. Think about it. There are only about 200,000 tons of gold ever mined in all of human history. That's it. You could fit it all in an Olympic swimming pool. Meanwhile, central banks can create trillions of dollars with a keystroke. Which one do you think holds its value better over time? Let me tell you a story. In 1971, an ounce of gold cost $35. Today, over $2,000. That's not gold becoming more valuable. That's the dollar becoming less valuable. Gold didn't change. Your currency did. And here's the kicker. We're just getting started. You see, there's this thing happening in global finance that most people completely miss. It's called de-dollarization, and it's accelerating faster than anyone predicted. Countries that have relied on the US dollar for decades are now actively moving away from it. Russia, China, India, Saudi Arabia, they're all reducing dollar holdings and buying gold instead. Why does this matter to you? Because the dollar's global dominance is the only thing propping up its value. When that dominance fades, the consequences will be severe, and the smart money isn't waiting around to find out how severe. Let me paint you a picture of what's really happening behind closed doors. The COMEX, that's the major commodities exchange where gold futures trade, has been showing some very interesting patterns lately. The ratio of paper gold to physical gold has been climbing. What does that mean? It means there are way more claims on gold than there is actual gold to deliver. It's like a game of musical chairs. Except when the music stops, most people are going to find out their gold doesn't actually exist. It's just a promise on paper. And promises break when everyone tries to collect at once. This is why central banks are demanding physical delivery. They're not stupid. They understand that in a crisis, paper promises are worthless. They want the real thing, sitting in their vaults where they can see it and touch it. Poland just repatriated 100 tons of gold from the Bank of England. Germany brought back their gold from New York and Paris. These aren't random decisions. These are strategic moves by people who see what's coming. Now, I know what you're thinking. But gold doesn't pay dividends. It doesn't generate cash flow. It just sits there. You're right. It just sits there, maintaining its purchasing power, preserving wealth, doing exactly what it's done for 5,000 years while empires rise and fall, currencies come and go, and governments promise this time is different. Let me ask you something. What good is a dividend if the currency it's paid in loses half its value? What good is cash flow if that cash can't buy what it used to? You're not getting richer. You're just getting more pieces of paper that buy less stuff. Here's a reality check. In 1970, the median home price in America was about $23,000. Today, it's over $400,000. Did houses become 17 times better? No. The dollar became 17 times weaker. But you know what? That same house cost about 650 ounces of gold in 1970. Today, still about 650 ounces of gold. Gold didn't make you rich. It kept you from getting poor. And that's the point everyone misses. Gold isn't an investment. It's insurance. It's the fire extinguisher you hope you never need but are damn glad to have when the kitchen's burning. Speaking of insurance, if you're sitting on $100,000 or more in retirement accounts, you might want to look into how gold IRAs work. I put together a free guide that covers how to get physical gold into your retirement account without triggering tax penalties. It's in the description. Worth checking out if you're thinking about protecting your retirement from currency debasement. Anyway, let me show you where this is all heading. The supply situation for gold is getting tight. Really tight. Global mine production has been essentially flat for years. The easy gold has been found. New discoveries are rare, and when they happen, they're in increasingly difficult locations. It takes 7 to 10 years to bring a new mine online, and that's if everything goes perfectly. Meanwhile, demand is exploding, not just from central banks, but from Asia. China and India alone account for over half of global gold demand. And as their middle classes grow, that demand is only going to increase. These are cultures with thousands of years of gold tradition. They understand its value in a way Western cultures have forgotten. But here's what really keeps me up at night: the derivatives market. There are hundreds of trillions of dollars in derivatives contracts floating around the global financial system. These are essentially bets on bets on bets. When, not if, but when this house of cards collapses, where do you think money is going to run? It's going to run to the one asset that has no counterparty risk. The one asset that can't default. The one asset that's been money for longer than any government has existed. Let me tell you about what happened in 2008. When Lehman Brothers collapsed, gold initially dropped as everyone scrambled for cash. But then, something interesting happened. As the full scope of the crisis became clear, gold went on a tear. It more than doubled over the next 3 years while stocks struggled to recover. Why? Because people realized that the entire financial system was built on sand, that the safe assets they'd been told to buy were anything but safe, that when push comes to shove, you want something real, something tangible, something that can't be printed away or defaulted on. And here's the thing: 2008 was a warm-up. The problems that caused that crisis weren't solved. They were papered over with trillions in printed money. The debt levels are higher now. The derivatives exposure is larger. The system is more fragile, not less. You know what's fascinating? If you look at gold's price history, it doesn't move in a straight line. It goes through long periods of consolidation, then explosive moves higher. We saw it in the 1970s when gold went from $35 to over $800. We saw it in the 2000s when it went from $250 to $1,900. And we're seeing the setup for another one right now. The technical picture is compelling. Gold has broken out of a decade-long consolidation pattern. It's making new all-time highs. The momentum is building. But more importantly, the fundamental drivers are stronger than they've ever been. Think about the geopolitical situation. We've got tensions between major powers at levels not seen since the Cold War. We've got supply chain disruptions that revealed how fragile our just-in-time economy really is. We've got inflation that's proving far more persistent than central banks predicted. And what's the response? More money printing, more stimulus, more debt. It's the only tool they have left, and they're going to use it until it breaks. Here's something most people don't realize. The gold market is tiny compared to other asset markets. The entire above-ground gold supply is worth maybe $12 trillion. That sounds like a lot until you realize the global bond market is over $130 trillion. The stock market is over $100 trillion. Real estate is over $300 trillion. What happens when even a small percentage of that money decides it wants the safety of gold? The price doesn't go up. It explodes. There simply isn't enough gold to meet that demand at current prices. This is why the smart money is accumulating now, while prices are still reasonable. They're not waiting for confirmation. They're not waiting for the mainstream media to tell them it's okay. They're acting while there's still time. Let me share something with you. I've been watching the gold market for years, and I've never seen a setup quite like this. You've got central banks buying at record levels. You've got supply constraints. You've got unprecedented monetary expansion. You've got geopolitical instability. You've got inflation that's eroding purchasing power faster than wages can keep up. Every single fundamental driver is pointing in the same direction. And yet, most people are completely oblivious. They're still chasing the latest tech stock or meme coin, hoping to get rich quick, while the foundation of the monetary system crumbles beneath their feet. Here's a question for you. What percentage of your wealth is in assets that can't be printed, debased, or defaulted on? For most people, the answer is zero. Their entire net worth is denominated in currency or currency-based assets. They're all in on a system that's showing cracks everywhere you look. That's not diversification. That's concentration risk on a massive scale. Now, I'm not saying sell everything and buy gold. That would be just as foolish as having none. But having zero exposure to the one asset that's preserved wealth through every crisis in history, that's not prudent. That's gambling that this time really is different. Let me tell you what the wealthy do. They don't put all their eggs in one basket. They don't bet everything on the system continuing to work perfectly. They hedge, they diversify, they own assets that perform well in different scenarios. And in a scenario where currency loses value, which is the scenario we're living through right now, gold performs. It's not speculation. It's not a gamble. It's 5,000 years of historical evidence. You know what's interesting? The same financial institutions that tell retail investors to avoid gold are the ones facilitating central bank purchases. The same analysts who call gold a barbarous relic work for banks that hold gold in their reserves. There's a disconnect between what they say publicly and what they do privately. Why do you think that is? Because they understand something that most people don't. In a world of infinite currency creation, finite assets become infinitely valuable. And gold is the most finite, most liquid, most universally accepted finite asset that exists. Here's the reality. We're in the late stages of a debt supercycle. Governments around the world have borrowed more than they can ever realistically repay. The only way out is inflation, printing money to pay back debts with devalued currency. It's happened throughout history, and it's happening again right now. The question isn't whether this will impact you. The question is whether you'll be prepared when it does. Think about what inflation really means. It's not just higher prices at the grocery store, though that's part of it. It's the systematic destruction of savings. It's the transfer of wealth from savers to debtors. It's the invisible tax that hits hardest those who can least afford it. And gold is the antidote. Not because it makes you rich, but because it keeps you from getting poor. It maintains purchasing power when everything else is losing it. Let me paint you a picture of what's coming. As inflation persists and people realize their savings are evaporating, they're going to look for alternatives. Some will chase stocks, driving valuations to unsustainable levels. Some will chase crypto, hoping for the next big score. But eventually they'll realize that in a crisis, you want something real. That's when the rush to gold begins. And when it does, the price won't move in percentages. It'll move in multiples. We've seen it before. We'll see it again. The difference is, this time the scale is larger. The debt is bigger. The money printing is more extreme. The consequences will be more severe. And the move in gold will be more dramatic. You know what keeps me up at night? It's not the people who understand this and are preparing. It's the people who are going to wake up one day and realize their entire life savings has been cut in half by inflation, and there's nothing they can do about it. Because here's the thing, by the time it's obvious to everyone, it's too late. By the time your neighbor is talking about buying gold, the price has already moved. By the time the mainstream media is recommending it, the opportunity has passed. The time to act is when it's uncomfortable, when it feels early, when people think you're crazy for worrying about things that could never happen here. That's exactly when the smart money moves. Look at what's happening in the physical gold market right now. Premiums are elevated. Delivery times are extended. Dealers are struggling to keep inventory. These are signs of stress in the system. These are signs that demand is outstripping supply at current prices. And yet, the paper gold market shows plenty of supply. How is that possible? Because paper gold isn't real gold. It's a promise to deliver gold. And promises are easy to make when you don't think anyone will actually demand delivery. But what happens when they do? What happens when the music stops and everyone realizes there aren't enough chairs? That's when the real price discovery happens. That's when paper and physical prices diverge. That's when having real, physical gold in your possession becomes priceless. This is why central banks are demanding physical delivery. This is why smart investors are taking possession. This is why the wealthy have always kept a portion of their wealth in gold, regardless of what financial advisors recommend. They understand that in a crisis, possession is everything. You can't eat a stock certificate. You can't heat your home with a bond. But gold? Gold is money. Real money. The kind that's been accepted everywhere, by everyone for thousands of years. Let me ask you something. If the system is so stable, if the dollar is so strong, if everything is fine, why are central banks buying gold at record levels? Why are they repatriating their gold from foreign vaults? Why are they diversifying away from dollars? They're not doing this for fun. They're not doing this because they're bored. They're doing this because they see what's coming and they're preparing for it. The question is, are you? Here's the bottom line. We're living through a monetary transition. The old system is breaking down. A new system is being born. And in that transition, the people who hold real assets will fare far better than those who hold paper promises. Gold isn't going to make you rich overnight. It's not a get-rich-quick scheme. It's not going to double next week. But over time, as the monetary system continues to debase, as debt continues to grow, as central banks continue to print, gold will do what it's always done. It will preserve wealth. It will maintain purchasing power. It will be the anchor in the storm. And when you look back 10 years from now, you'll either be glad you acted when you had the chance, or you'll be kicking yourself for ignoring the warning signs that were right in front of you. The choice is yours. But the clock is ticking, and every day you wait is another day of exposure to a system that's showing cracks everywhere you look. Don't wait until it's obvious. Don't wait until everyone else figures it out. Don't wait until the price has already moved and you're buying at the top. Act now while you still can. Because the opportunity to protect your wealth at reasonable prices won't last forever, and when it's gone, it's gone. The smart money is already moving. The question is, will you join them or will you be left behind?